All right, let's continue our conversation with Oliver Slope there in Chicago at the edge of the trading floor. Very active trade today compared to how it has been. All right, all of this news hasn't done a whole lot for, I shouldn't say that. I should say it hasn't done as much for the livestock as it did the grain complex here today.
Yeah, it's been a little bit quieter in the grain complex, and it really has been for the last month. If you look at that February live cattle contract and look back to where we've been closing, we've closed between 123.85 and 126 for 27 of the last 29 sessions. So we've just been trending sideways. Now, at the end of last month, we talked about a bearish seasonal coming into play. That has expired, and now we're looking at a bullish seasonal that picks up tomorrow for that February live cattle contract. If you had bought December 13th and sold on December 29th, that had been profitable for 15 of the last 15 years, with the average gain being about $3. Now, not to say that that's a guaranteed thing, but something to keep a very close eye on, especially for us, because we're technically leaning on the short side a little bit, but knowing that there's a bullish seasonal has us a little bit hesitant and a little bit gun shy getting too aggressive at these levels.
But is that the signal that the cash is sending?
Yeah, the cash this week so far, we're here in 118 to 119,
yep,
which is probably a little bit of a disappointment compared to what we've seen in the past, or the upward trend. It looks like we're starting to die out a little bit here. We've seen boxes retreat. So if we see boxes and cash continue to retreat, I wouldn't be surprised to see that kind of throw a wrench in the seasonal and put a little bit more pressure on the market. Now, we have been trending sideways, as I had mentioned. If we take out the low end of that range, 123.85, I wouldn't be surprised to see some accelerated selling pressure come in from the funds who've established a good-sized net long position here over the past couple months. They're sitting net long probably about 80,000 contracts or so. December
fats right now down 8 at 120.50. February down 20. That April contract, though, has been the strong point of this the live cattle market. It's up 38 right now. Feeder cattle. The April and the May and the August were all higher by anywhere from 10 to 15, 20 cents. But that January down 25, the March down 28. Oliver, these hogs a little bit higher here today, not a whole lot. We've come off of some of the highs earlier, especially on the February contract, but still a little bit of a gain over here.
Yeah, and it's nice to see some of that tariff talk is obviously trickling into some strength in the hogs, but lean hogs have been very choppy. You get a positive headline, the next day we retreat. We've been trading sideways. The range for February hogs has been 66 on the bottom side to 70 on the top side for 17 consecutive sessions. We're hoping we can see a breakout or a breakdown. Obviously, we want to see a breakout, probably a little bit more so. And if we were to get out above that 70 range, I wouldn't be surprised to see new buyers, trend followers step in, as well as short covering, take us a little closer to 75, or we've got some moving averages coming in, as well as some key retracements.
Oliver, we still have a little way before we go to the close and the settlements here today, but we'll come back tonight and visit with you on the Rural Evening News, get your thoughts on all of this and a whole lot more. What a day it's been. Thank you very much. Have a great afternoon. And Tammy, as he mentioned, just a lot of headlines today, really pushing this market around.
I'm telling you, it's been a busy day on both sides.